Welcome back everybody to the Passion Project podcast, and welcome to a little bit of a new segment. Is now we do podcasts that are 50 minutes long, just because your attention spans are so low. We're trying to kind of have to switch things up a little bit. So, welcome our guest. So, introduce yourself. Who are you? What do you do?
Yeah, so I'm George William, first year at IE. I'm doing the BBA program, and it's my 7th month in Madrid. I'm liking it so far. Pretty good.
Cool, man.
And you're into investing, and you're into financial services, and
I've been into it for like 2-3 years now. Before I was like just kind of in the business spectrum.
okay.
I had like a little startup as a kid, and then I think right about 3 years ago now, I started looking at like the equities market, and I just went straight for it. I saw it, I saw how hard it was, and I just loved the challenge. I just went for it. So that was a big thing for me.
Okay. Because I mean, it's famously can get quite sticky with stock trading and stuff like that, right?
No, but that's actually why I went for it, because I like challenges. You know what I mean? Like if something doesn't take enough effort, I'm just like, nah, I get bored with it. So like my hard classes, for example, in school, are always the ones I get the highest grades on. And the easy ones, I would just be like, I'll just kind of go a little bit.
That's good, man. That's a good mindset to have, 100%. So why did you get into investing? What was the reason?
Okay,
Were you
so
always passionate or?
yeah, that's the thing. So I wanted to I heard like a lot of hype around it and everything, like I saw like a lot of people that were like, oh yeah, I'm making a lot of money from it and everything, and I wanted to see if it was cap. I wanted to see like how realistic is that actually that like people make this kind of money, and if it's that easy, why is not everybody doing it, right?
Yeah.
So I go into it, and I think what actually like differentiates me from like most people, I just went for it. Like I didn't care if I was going to lose or not. I took like 1K out of my business, I just went for it, and I said, okay, cool, let's see what happens. And I lost money, and I was like, okay. That's when I was like, this is good. This is fun. This is gonna take effort. I'm into it. And then from that day on, I was just like full on stocks. I started reading, researching. Whenever I made a loss, I would try and find out why I made that loss. I would like recalculate and I tried again, and then have like a better run, and then lose again. And I have to like lose, learn, and then try it again and again and again. I think it took me like 7 to 8 months, but then like that's when I became profitable. When I stopped caring about seeing the red numbers, and I focused more on, okay, can I actually learn this craft? Or can I actually get good at this?
Yeah.
That's my story.
What's this trade that you made the most money on? Like all time? That one trade that made that
Some inside information.
I mean, okay, I remember it so well because it was right before my birthday, July 25th, 2020.
Okay, he knows.
I remember that. I will never forget it in my life. So I was shorting a couple of Chinese companies, right?
Yeah.
So it was one of those short plays. And I was looking at their business model, right? And it seemed quite good to me, but they had gone from like $9 a share to about 24. So obviously there were some flaws in overvaluation, right? I ran like my DCF model, and I saw it was like a little overvalued. I looked at my tech pool setup and everything, and I was like, okay, cool. There's a bit of a gap in the market, but I was aiming for like a 20% return, right? With some leverage,
Yeah.
The most I expected was like a 30% margin. And I took into account the potential chance that some of the geopolitical issues in China could play into it. And oh boy, was I right about that one. Because the next day, what do you know? I wake up to the markets and I see the stock 60% down. Mind you, I'm leverage times 5. That's how confident I was. So I think
leverage times 5.
Yeah, no. At the end of that trade, I think I bagged, what was it? 324%.
Wow.
One trade.
That's not too bad, not gonna lie.
That trade was the best I've ever done. Maybe the best I'll ever do for a while. Because it was pretty crazy.
What about the worst?
The worst? Ooh. It was a biochemical company, one of those like small biotech companies, like 50 million market cap, like nano cap stock, and I had a really big bet on it. I knew it could have gone wrong though, so it was within my expectations.
Yeah.
And what was it? I lost like 70% of that on that one, so that was a pretty big loss.
So do you think like people when they start investing, they have to fail a little bit?
Oh no, definitely.
Yeah.
I feel like if you fail, it actually like gets you in the right mindset. Because if you go in, like I used to think, I want to have just like green trades, So I'd like think about trades so much that I wouldn't even do it, And now I'm just like, okay, you know what? This is a trade. These are my odds. I just go in. If it's bad, I know the next one's gonna be good, If that one's not good, next one for sure.
Right. But like, what if there's a lot of money in the line? What about then?
I mean, that's the thing.
You have to take a risk, right?
Oh, I mean it's just personally how I work though. Like I'm not too scared of risk. I think it was like this empirical study that came out where it was like humans are 2 times more scared of losing than gaining, right? So like when you see like if I make like a 30% return, I'm like I'm happy, you know. But a 30% loss, I'm really sad, you know.
Right.
But I feel like I switched that part of my brain off, and that's actually when I turned profitable. Because in the end of the day, losses and gains are actually the same thing, you know. It's like 2 sides of the same coin. So if you have to accept the gains, you have to accept that you're gonna lose sometimes. I'm not perfect. I'm profitable. I make money every month, but I'm not perfect. Some trades will definitely be bad. I mean, last week I was up 25% on my account, made a couple bad trades in a row, and I lost like 10% on that account, right? So like I knew it's within that. So the aim shouldn't be to be perfect. It's to gain like the statistical edge. So even if you lose on the longer term, you actually like you gain. You know what I mean?
Yeah.
It's not about winning everything. It's about winning most of the trades. That's
Okay.
That is good, man.
Okay.
That is some good advice.
What are you invested in right now? What are your top stocks, whatever, equities, whatever?
Yeah. Okay, now I'm like a really short-term investor. As like a day trader, I don't hold stocks so much.
Okay.
But I'd say like the ones I have my eyes on the most. I'd say there's like maybe 3-4 titles. This fintech company called Affirm Holdings. It's AFRM. That's a really big one for me. I think they have a huge amount of potential. And another one, Tile Education, the one I had a huge short play on. Its peak was about $100 per share. It's currently at like about $2 per share. That's a huge decrease. So now I'm looking for that trend reversal. I'm trying to capitalize on that gain. And then natural gas, because I'm really big on commodities trading, and I feel like natural gas is a good area right now. I think everybody's focused on oil, right? And they're focused on like how oil is. But I feel like if you look at the historical trend, actually, the difference between the natural gas prices and the oil prices, there's starting like a bigger disparity, right? Like, because I mean, if you look at just like the raw amount of energy, an oil tank, maybe like an oil barrel, maybe has like 6 times more energy than natural gas, right? So if we go purely based on that, the price should be like 6 times lower or higher, right? But natural gas currently is about actually about $4 right now, right? Oil is about 100. So that disparity has had a huge increase. And I feel like if you stretch a market enough, there's going to be a trend reversal at every single turn. And I feel like right now, natural gas is actually the play that everybody's looking at. So that's personally what I'm trading the most right now, along with a couple of those stocks.
Okay. So guys, like, this is a lot of information. Like, I'm, you know what's up. You know what your thing. Yeah.
So like, how did you study this stuff? How did you like? So obviously it was a lot of experimentation in the market, putting money in, failing, and then learning from your failures.
Yeah.
And then how do you like? What was the theoretical part?
Yeah. On a daily basis, I probably have like 200 tabs open only on like investments, only purely investments. And I look at things that I trade, right? So for example, you probably didn't even know this, but there's actually a futures market for orange juice.
For orange juice.
For orange juice, right? So I look at the most random stuff and I'll just like expand my mind, right? Because the more you know, the more you're able to understand the market. Now the goal here isn't to understand the entire market, that's simply impossible, it's way too big. But you need to know where the value is, right? I mean, currently right now we're entering this whole recession in the US markets, right? The only people making money right now are the people that are able to find the value, right? If you can get the good stocks at a discount, you can make money. But if you keep buying the overvalued stuff, if you keep holding the really bad bags and everything, you're not going to make money, right? So I look at Investopedia. I look at so many different videos.
Yeah.
I read like a lot of different books. Not some of the big titles. Like I don't really feel like reading some of like some of those value investing titles. Like that's not really my type. I'll learn from them. I'll read the summaries, but that's not really like my kind of investing and everything.
Right.
It's like I'll just expand my mind and like grab everything that I can. News articles, I have like an app specifically only where like it's like investment knowledge, right? Every single market I can get my hands on, I'll like just read and process, and that's my whole process. So like I feel like there's no bad information. Even just like let's say like TikTok traders, right? Like those guys are just they're really bad.
Yeah.
You know? But I feel like even just watching them tells you how some like retail investors think, you know? And if you can like understand the naivety, you can understand who's moving the markets and how they're moving it. So I feel like even those kind of people are able to help you learn more about investing. So just a lot of knowledge there. Because I mean, like, who's trading the market, right? The computer trading the markets, the people, retail investors trading the market, institutions trading the market, right? Banks trading the market. So like, if you understand each of their kind, you know, like if I see like on a chart, for example, if I'm seeing the volume, I can't tell for sure, but I can have a pretty good guess of who's moving the markets, you know? Like if oil drops out of nowhere at like Monday midnight, 4%, that's either a computer or an institution. There's no other way around it. You know, it's gonna be really take that. So I feel like those kind of things are also very, very important for sure.
Okay, so I've never invested in anything.
Yeah.
I really want to start.
Mm-hmm.
what stock and how much should I invest? Okay, this is all hypothetical.
Yeah. Rich man.
I've got €1,000 to spend.
Okay.
What stocks should I start in? Where my risk tolerance is average. What should I do?
Okay. So you said risk tolerance average. What's your investment time like? Are you putting it for like a couple days, couple hours, couple months, years?
I'm not super patient, so I'm gonna need stuff like I want to see results.
So you want to see like the money like tomorrow? So like maybe like a week or like a month?
Yeah, a week is alright.
A week is alright. Okay, cool. If I'm thinking right now, personally, for me in a week, I would look at the stocks that have been the most volatile. So like, I mean, I'd have like what I could look at, for example, is I would go like on an options website and I would see which options have the highest like volatility currently. Because options trading, like it's very, very accurate and the markets are very well priced. So if it's an increased premium and increased volatility in them, that's where you can find the value. So if I did that, I could tell you the exact titles. In my humble opinion, I mean, I'm just like on the spot right now. Tal Education, it's a private tutoring company. They've been quite volatile in the past few days. I would look at things like a couple penny stocks, for example, because they've also had like a lot of volatility, especially like the biotech ones. Like, for example, we have Chem Biotechnology. We have this startup called CNN. It's a company that recently had a merger, so that those kind of like small market cap titles are the most volatile right now. So if you want to see movements, I'd say go for those for sure. You said you had a low risk aversion though. Volatility could be very high up or very high down.
Yeah, I was gonna say.
So I would definitely say on that end, you want to like diversify and mix that up with some like more blue chip stocks, like for example, like I wouldn't say even like Tesla. I would because that's pretty volatile.
Yeah,
I'd say things like Amazon, Google, right? Have some of those like really big title players, right? And then maybe even like a couple EFTs in there. I would say like you want to split them in like 5% per each thing. And then if you have like some EFTs, some really big companies, and then like maybe 20 or 30% those like really high risk, high volatility, high gain penny stocks, I think you have a pretty good portfolio over there, because then you can get some of that premium edge. You can try and beat the market with those small percentages, right? But at the same time, you're not going to take a 50% off portfolio because that's...
Wow, I mean,
that's perfect.
Yeah, if any of you guys are, if I described any of you guys, you know what to do. I mean, this is like normal people. Is that okay if I start just investing in penny stocks or something right now? Well, is it something if I'm a little bit scared of losing a lot or something?
Yeah.
That's not something I should invest in, right?
Never, nah.
Okay.
Oh yeah, no, never.
Okay.
I'm just saying, cause if you want that, cause right now the markets as a whole are very volatile,
Yeah.
right? And I feel like some of the value right now is being found penny. So like some penny stocks, like CNN I was talking about, for example, this EV startup, right? They had a reverse merger, so their stock went from 50 cents to how much was it again? $15, right?
Yeah.
And then now it's almost back down to $1. So that's a lot of value deleted from the market. So that has a lot of underlying asset value over there, right? But as a starter, I definitely wouldn't recommend going for that unless you know exactly how much you're risking.
Okay. So this is purely, first of all, this is not financial advice.
No, yeah, no.
We're gonna put a disclaimer.
A big disclaimer.
Second of all, you don't know how much you could potentially lose from all of these things, and
you could easily wipe out. No, for sure. I mean, the most I've seen a penny stock go up was 500%, and the most I've seen it go down was about 79%. So I mean, if you had 1,000 and 79% down, you have 200 left. So that's a huge money wipeout over there. So.
Okay, but it's not smart to invest in this type of stuff, right?
Yeah, no, I just feel okay with that because I have a high amount of risk tolerance, and I mean I've already done that, right? So I have a good amount. I'd be comfortable with that.
Yeah.
But for the average person, especially if it's starting off, God no.
Yeah.
It's gonna make you see stuff.
So the issue with my question, with my hypothetical, was the time frame.
Yeah, the definitely time frame.
Okay, so if I was more sensible, for example, 5 months, you would give me different assessments.
Very, very different assessments.
More secure, less volatility.
Yeah, I'd go for the mid cap stocks because then mid caps have an ability to help you gain alpha in the market, but at the same time they're not as volatile. You know what I mean? Especially then. And some mid caps right now are very, very undervalued on any kind of metrics. So those are a lot more I'd definitely go for those kind of thing. Yeah, the fintech I was talking about, for example, Affirm Holdings.
Awesome, bro. I think that's a very good summary. And I think we should move on to our rapid fire round.
Woo!
Yeah? You ready?
Rapid fire.
Alright, so
Alright.